Hello, this is Joe Pryor, the virtual real estate team in Oklahoma City. And, I have been talking about market conditions, and I have been a little bit depressed throughout this whole year because after last year, I thought 2021 was going to be the most fantastic, most incredible experience in terms of selling residential property to investors nationwide. It's kind of turned out to be good, but not fantastic. And of course, part of the problem has been with inventory, but not just with inventory, but the level of supply and demand. Because what happened in a lot of markets that opened back up last year, and we fully opened on phase 3 of June of 2020, as that during that pandemic period, people very much shut down. And they held on to their money. They didn't spend a lot of money on going out to eat. I know people that used to go out to eat twice a day, and they didn't go out at all. They're not going on vacations. They're bankrolling money. And when we came out of the lockdown, then what happened was interest rates were 2% for an owner occupant, even under 3% for an investor with certain types of loans. And so what happened is this huge tsunami of buyers. And supply and demand definitely affects things also. So with a lack of inventory and this huge demand, there just wasn't much going on. It wasn't unusual to get anywhere from 3 to 14, 15 offers on a home in one day. Now that is changing. The market always does adjustments at a certain point and never always goes up or always goes down. So what's happening at this moment is people are getting a little bit more savvy about, well, should I really pay $15,000 more for that property? What if I have to sell at certain points? So what we're seeing is that they're backing off the realtors that want to make the sale desperately because there's more realtors than there are homes to sell. And so they're going, no, wait a minute, this may not be the right idea. The other thing that's going on is, first of all, in residential construction, it was every day I went into the MLS, it was 2 to 3 to 1 closed and pending sales as versus active sales, things coming on the market that are brand new. Right now, it's kind of going where there's at least as much new homes coming on the market, new property coming on the market, as there is things going off the market. And very often I'm seeing more things come on the market right now. Now that's a combination of existing homes and brand new construction. So what's happening is we're seeing a lot of existing homes. And starting this month, we have seen a dramatic increase of being caught up again in new construction because the developers that sat on their hands, they're finally getting these properties opened up for builders to build on. These people are now building these properties. They're pricing them a little bit earlier than they normally did because prices of materials are going down. So this is extremely positive. It will slow down appreciation, which is not a bad thing. I don't want this thing to go out of control. Oklahoma City and Tulsa, these are two markets that are as steady in the last 21 years as you can imagine, except for about the last 6 to 8 months. I'm glad to see that happen. Rents are up. Yes, appreciation is still going to go on, but it's not going to go on at an extreme level. We're still affordable, and now we have choice, especially in an existing home. So we're now starting to really sell a lot of existing homes. So this is the good news about what's going on. If you're an investor, it's a great place for us to get together.